If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, where we talk about business and technology. Today, we're going to be talking about a pledge made by several automakers in China to avoid engaging in price wars. This is going to be a pretty good video, so if you're new here, make sure you hit the like button. Really does go a long way in helping out the channel. Make sure you hit the subscribe button so you don't miss out on any content, the notification bell icon as well. Like I said, your engagement really does go a long way in helping out the channel. Before we dive into the details, let's discuss why engaging in a price war is ultimately no good for any party involved. Price wars may seem initially attractive for consumers as they offer them lower pricing. However, it's important to understand that no one truly wins in a price war, and we're going to explore why. Number one reason is eroding profit margins. That's right, this cost that's being saved by consumers has to be accounted for somewhere, and so the company has to bear the burden. And that can make it hard to achieve profitability and also, like I said, reduce margin. That's because lower prices mean lower revenue. For a growing company, that's a tough situation to be in. Lower revenue also means less money coming in to invest in innovation and growth. Number two is reduced brand image. Constantly reducing prices to remain competitive can give the perception that that's all a company can offer to sell its product, giving the perception to consumers that this product is lacking in quality or value. Consumers may question why a company keeps on slashing its prices, leading to doubts about a company's product reliability or long-term viability. Number three is unstable business practices. Engaging in price wars forces companies to make the sacrifices somewhere. They may cut corners when it comes to product quality, customer service, or even research and development. This ultimately harms the sustainability of their business, and so it becomes difficult to maintain a competitive edge in the long run without adequate resources. Price wars also have a negative impact on the industry as a whole. As other companies become encouraged to participate in a price war, the entire industry starts to become a race to the bottom. This can create an unhealthy market environment which hinders innovation and stifles overall industry growth. So those are all the negative things that come out of a price war, but let's talk about the importance of healthy competition in a market. Instead of resorting to price wars, instead of defining their products solely just on price, healthy competition allows companies to differentiate themselves through innovation, product quality, and customer experience. It fosters a market where companies strive to meet the unique and evolving needs of consumers. Now that we understand why no one wins in a price war, let's revisit the recent pledge made by these several automakers. The pledge made to avoid destructive competition and foster a healthy market where everyone wins. Consumers from an innovation standpoint, consumers where they get the best pricing, and companies where they don't have to sacrifice on margin and cut corners when providing products to these consumers. Okay, so a slew of automakers, including NIO, Tesla, BYD, XPeng, have vowed to join forces and promote healthy competition in the Chinese electric and the Chinese new energy vehicle market, putting an end to disruptive price wars that have been plaguing China for the past several months. And even in 2020, there were price wars as well, but it's been more prevalent, more so now than ever. The price wars in China gained traction earlier this year when Tesla slashed the prices of their Model Y by $7,000 each in China. This put pressure on several other automakers to come down in prices to remain competitive. It also sparked concerns amongst Tesla customers who had recently already purchased a Model Y for a higher price. Historically, Tesla slashed its prices only when it needed to. This sudden price cut sent shockwaves throughout the global EV market, highlighting the real-world implications of price manipulation. In response to this situation, initially some automakers like NIO stood their ground and said that they weren't going to cut their price, although they ended up having to cut their price and backtracking on their statement. Anyways, the point is that majority of automakers had to slash their prices to stay in the market, and so they did. Despite all the controversy, Tesla's strategy seems to have paid off. They had record-breaking deliveries in Q2 2023. They surpassed expectations, but now it seems that Tesla wants to play nice and maybe they're doing this in order to have a better relationship over in China, which is not their home turf. So there was a pledge for fair market order. This pledge, facilitated by the China Association of Automobile Manufacturers, calls for fair market order and calls for commitments to regulate marketing activities and also avoid false marketing practices, prioritize product quality, and fulfill social responsibility. It's important to note that this pledge is self-regulatory and not legally binding. However, it demonstrates good faith amongst all of these auto manufacturers in China and hopes to put an end to these price wars. It remains to be seen whether this pledge will be effective or not, and only time will tell, but for now, it's a positive step towards a healthier market. That's going to be it for today's video. Thank you guys for watching. Like I said earlier, if you're new here, hit the like button, hit the subscribe button, click the notification bell icon. Leave a comment down below. Your engagement really does go a long way in helping out the channel. And I'll catch you guys tomorrow for a weekend recap and then next week for the Courtside Financial Podcast.